Welcome to the Cumbria Chamber of Commerce podcast, your regular update of business news and issues from around Cumbria. Find out how we support new business and help existing businesses to grow and flourish at cumbriachamber.co.uk. Now here's the Chamber's Business Engagement Manager, Julian Whittle, with the latest episode.
Hello, I'm here with Mark Rowbotham, a consultant in international trade, logistics and customs issues, to explore how a no-deal Brexit would affect businesses that export or import. Mark, for clarity, explain what a no-deal Brexit means in terms of trade. I mean, how does it differ from the current arrangements?
First of all, thank you very much for having me in here in the studio to talk about this. Now, the way it stands at the moment, we have a single market where everything is effectively the free movement of goods, services, capital labour throughout the European Union. Now, a no-deal Brexit says there will be no formal withdrawal deal. There will be no provision for follow-up in terms of access to European data, or for that matter, conventions that we've had so far with Europe. Everything will simply be a complete break from Europe, and that the UK will stand alone in terms of its international status.
Okay, so if we leave without a deal, our trade with the EU will be governed by World Trade Organization rules, is that right?
It certainly is. At the moment, when we have movements of goods across the border, there are no customs checks. Everything simply moves in a simplified basis. What will then happen is that full customs tariffs will then apply to all goods being shipped to and from the EU, meaning imports and exports, as well as the fact that there will be the need for full customs import and export declarations being submitted for all import and export transactions.
So let's deal with tariffs first. How can businesses find out about the tariffs that would apply to the goods, either if they're exporting or importing?
The government has at the moment various websites that deal with tariffs. For example, there is something called ICN Online, which is for our export tariffs. That can be found on a website called uktradeinfo.com. We also have our national tariffs website for imports, which deal with import duties, and that can be found at www.gov.uk/trade-tariff, which then gives us details of all the commodity codes and the duty rates against them. There is also a provisional tariff that can be found on the gov.uk website, and I believe it is known simply as the Brexit tariff. I once looked at it a while ago. There have been changes since. But these are the main tariff areas on the government websites that enable traders to look at commodity codes for classification, as well as the duty rates that will apply.
And what about, because you talked about custom declarations and so on, what extra documentation and paperwork is going to be required, and what do businesses need to do to ensure that their consignments aren't held up at customs?
Well, what's going to happen, Julian, is that for a start, there's going to be the need for full paperwork concerning the nature of the goods, invoices, packing lists, transport documents. But whereas at the moment, the hauliers would simply deal with some of those and would issue transport documents such as consignment notes, all that will now have to be formally submitted to import and export clearing agents, because that documentation will have to be used for the purpose of the submission of customs entries, i.e. the declarations for imports and exports for goods moving either way. In addition to that, because the intention is to use simplified procedures, which effectively mean very abbreviated declarations, then there will have to be a system of approvals, such as transitional simplified procedures for goods coming in, so that then the agents can actually put in a minimum of information to clear the goods into the country, get them to the trader's premises, and then issue proper declarations to get the goods cleared through customs electronically. Because let's bear it in mind, the days of manual paperwork has largely gone. Everything now is being done electronically. Similarly for exports, cargoes actually will have to be pre-cleared for going out, because of the European import system, which requires pre-clearance in a manner similar to the US CTPAT system that followed the World Trade Center disasters. So it means extra security, it means proper declarations, and the fact that the customs computer has to effectively clear those goods before they can either be shipped outwards or even when they reach the trader's premises, so that duty and VAT can be obviously removed from the trader in the nicest possible way, but in such a way that that has to happen before the trader would be able to sell the goods onwards.
I see. So now businesses have the option of making their own customs declarations or using an agent. What are the pros and cons of each approach?
Well, the pros, first of all, of the agents not being used for that purpose is that if the trader is doing a rather large number of entries, let's say they're bringing goods in even once every day, then the advantage of using the customs system for their own declarations means that they can actually input the information themselves, get it cleared through the customs computer, and then if, for example, there's duty and VAT to pay here, that can then be taken out of what we call a duty deferment account, which effectively means that although the calculations are carried out per transaction, the money doesn't actually leave the trader's account until a fixed day of the following month. Now, that's a very simplified process, and in reality can work very easily. It does now, and there are quite a lot of traders who are dealing with trade on a very regular basis who already use it. I hasten to add that there is a new customs computer system coming in called CDS, and that is going to make life theoretically simpler, but with all the glitches it has at the moment, we're not likely to see any major development on that score probably until early next year. Now, if the trader's doing the entries, they're already equipped to do it. Freight agents have been submitting entries now for as long as anybody can remember, electronically rather more recently. But the difference is that if the agent submits a declaration on behalf of the trader still has to instruct the agent with all the information that's necessary for the agent to complete that declaration. So it's really as broad as it's long. It depends upon really what the trader wants to do.
Now, you mentioned a moment ago that the transitional simplified procedures for importers. Can you explain a bit more about how these work?
Yes. Now, originally, when, let's say, on a deep-sea cargo coming in, a container would be declared at the point of entry into the country through the seaport, for example, and then duty and VAT would be calculated and paid more or less outright. That's because with containers, we're not getting things in per trader every single moment of the day. With the European system, there are so many trailer movements across the Channel and the North Sea that at any time, hundreds of trailers are coming through from the continent to the UK, and quite simply, it's impossible for the port to handle them while they're being examined or cleared through customs. So what TSP, Transitional Procedures, does is to summarily clear the trailer through the port on a very abbreviated, simplified declaration, this issued presumably by the agent, get the trailer to the trader's premises, and then tell HMRC, hey, the trailer's arrived. HMRC then put that in the system and say, great, you've told us, now you are able to do a full import clearance at a particular time, or certainly within a particular time frame, depending upon what HMRC is being reasonable. So it simplifies the process, it makes it entirely electronic, but the prime purpose is to keep trailers moving until they actually get to the trader's premises.
Oh, great. Thanks for that explanation. Now, most businesses realise by now, I would hope so, that they need an economic operator's registration and identification number to trade with the EU after Brexit.
Correct, yeah.
And HMRC is supposed to have issued these automatically to all VAT-registered businesses. What I hadn't realised until quite recently, I think exporters also need to have the number, the EORI numbers of their customers, don't they?
They certainly do, because with the simplified procedures, it's very possible that if, let's say, a customer in the Netherlands or Germany only has a VAT number, they wouldn't be able to have goods cleared through customs direct to their premises. The main element of an EOR number is it's a VAT number, yes, but it's got suffixes against it and the prefix of the country, because then it says that the trader is actually registered as a customs approved importer or exporter, which means then that they can have declarations made on their behalf using their VAT details. Now, because of the European system at the moment, those EORs wouldn't be used because of an internal market system. They will now be necessary. And one of the issues is there is no guarantee that, let's say, a European customer does have a customs registered number. And my advice is to all the exporters here, send an email to your customer finding out, do they have an EOR equivalent number? Because if they do, then the importer can obviously deal with import clearances at that end. But if they don't, it may be necessary for the UK exporter to physically have their own registered VAT number and customs number on the continent, because they may then be required to conduct import clearances on behalf of their customer.
Right. Let's move on to rules of origin for a moment. What are they, and what are the implications for exporters?
Right. Rules of origin concern the actual origin of goods when it comes to, let's say, a free trade agreement. Free trade agreements, as I may have explained earlier on, are basically agreements between countries that say, we will trade with you on a free trade basis on the condition that you can prove that the goods you are sending originate in the country of export. Now, bear in mind that a free trade agreement is conditional. It's not a single market. A free trade agreement is a specifically negotiated agreement between two countries or more to trade freely with each other on the condition that the goods originate. Now, the rules of origin can differ from country to country. There are rules of origin, for example, for the North American Free Trade Agreement between the US, Canada and Mexico. There are equally free trade agreements specific rules for the ASEAN, the Association of Southeast Asian Nations, and so it goes on. Within the European bloc, that wouldn't be necessary because it's a single market with a single customs tariff and therefore a completely integrated economic bloc. But when you have this free trade system, a country has to prove, or even a company must prove, that the goods it manufactured were either wholly produced, in other words, using nothing but materials and labour sourced from that country, or that it was partially produced in that there is a limit to the amount of material which can be imported from overseas. Now, the general rule, and this can differ depending upon the product, that says that any product, if it's wholly produced, says, fine, it is wholly produced. But if it's partially produced, it must have at least 60% of the ex-works selling price originating in the country of origin. By default, that means that the exporter is allowed to import no more than 40% of the value of that selling price in the form of non-originating material. For example, a company, let's say here in Cumbria, imports materials from China, which it is going to process into an engineering product. Let's say down in Barrow and Furness, for the shipping industry, it could be for all sorts of engineering purposes. Now, let's suppose that it manufactures something like a valve or whatever that's going to go into some form of petrochemical industry, and that industry is in somewhere like Norway. They would have to be able to prove that if they were importing material from China, it only amounted at maximum to 40% of the total ex-works selling price. So that means the rest, the 60%, would have to have originated in the UK, including labour costs and overheads, but very definitely to make sure that the vast majority of the material came from locally.
So how do they show that then? How does the exporter show that they're meeting the 60%?
They have to have a spreadsheet. Now, HMRC are using a new system called Approved Exporter Status, where the trader can actually get approved through customs to export to these traders overseas in the free trade agreement with no more than an invoice declaration saying, we hereby certify that the goods originate here. But in order to do so, they've got to prove to HMRC that those goods originate or do the materials. So they have to have a breakdown on a spreadsheet that shows the import material and where it came from, and then all the processes in this country for manufacturing, whatever else, that then state the majority of the costs originate in the UK and therefore can be proven on that spreadsheet to show precisely how those breakdowns have occurred.
Now, exporters may be able to make use of the Common Transit Convention. What is that and how does it work?
Now, the Common Transit Convention has in fact been used for quite a number of years, because let's suppose that an exporter from here was sending goods out, for example, to the Ukraine, maybe Russia or even Turkey, that they were going through the European Union, but they weren't going to be declared in the EU at all. They would only be declared when they arrive at the frontier with the destination country. Now, the Common Transit Convention means that any trailer from any part of the EU can therefore be declared at the point of export and then move under customs control to the point at which it will be declared for import into that destination country. So the Transit Convention allows trailers to move, for example, from the UK, Ireland, whatever, to the country of destination, or certainly to its frontier, at which point the import declaration is made. So that transit is not going to be used by customs at all. They will basically let that trailer move on the basis of customs control. It could also mean, for example, that a consignment being imported from the US into the UK or even into Germany and was going on to somewhere like Belarus or the Ukraine could move across the European Union without any duty and VAT, without any form of customs examination, and would only then be declared once it left the European Union and went into the country of destination.
So if we have a no-deal Brexit, will that continue?
Yes, it will. That's already been established, that convention will remain, because the need to make sure that trailers can move from this country across to a distant country, the other end of the European Union.
Oh, that's some good news then. I'd like to talk about VAT as well. What are the VAT implications of no deal?
Well, for a start, we'll not be in the EU VAT system, so that will not be controlled from Brussels as far as we're concerned. We'll have our own VAT regimes for purchases and sales, as if we were any international country. However, the VAT issue also occurs exports in terms of zero rating, and for that matter, imports in terms of import VAT calculation. It will mean that because of customs declarations, there will be the need for the export declaration to prove that the goods have left the UK and are therefore VAT zero rated as the rules apply. For imports, it means that import VAT will be chargeable on an import and then will be effectively paid or certainly accounted for by the import trader and then reclaimed on their VAT return. So either way, there will be a need to account for VAT on a far more rigorous basis. Now, we add to that a procedure called import VAT postponement, because what that's going to do is to mean that the import trader doesn't even pay the VAT at the point that it's been charged. They postpone it until they actually complete the ensuing VAT return, and then the system allows them to effectively charge themselves the VAT on the return and then claim it back, because the customs computer doesn't accept zeros. Typical, of course, no, it has to have a positive value. So you'll basically have to charge yourself the VAT and then claim it back accordingly, which the VAT return does allow for. But it means far more vigilance of VAT. It now means that the trader is going to have far more copious records of what VAT liabilities they have. If they're exporting, then have the appropriate evidence to say the goods have in fact left the UK and the export declaration is the evidence of this. And then make sure that the VAT accounting is in far more robust state than at the moment it may be. I mean, at the moment, accountants do deal with it, but it appears as though the department hasn't really done a lot of investigation or scrutiny into how VAT is being managed. From now on, it will be, because it will be a very crucial issue in terms of tax management.
What about trade between the UK and countries outside the EU, where the EU currently has a trade agreement presumably these trade deals won't apply to us any longer if we leave without a deal. What are the implications of that?
Well, in some cases, you're right, Julian, because at the moment we do rely very much on the EU deals with all parts of the world, the latest being Canada and Japan. However, the good news is that prior to this whole Brexit negotiation taking place, several countries had already decided they wanted free trade agreements with the UK. Those countries being Switzerland, South Korea, Israel, and Chile. Now, those agreements are actually in place so that the moment we do leave the EU, we will automatically have free trade continuity agreements with these countries. Now, bear in mind that Canada has already said it wants a deal with us and it wants that as soon as possible. Norway is a similar position. Japan wants one. And even President Trump, in all his wisdom, has said that he too wants a deal, although it will take time to conclude. The deals that we've already had with the EU are effectively going to be absorbed into our own system and therefore made into what we call continuity agreements. So that effectively we would then automatically have these free trade deals in place the moment we leave the EU. So again, it's good news in the sense that the free trade deals that already exist will be used, and then obviously new deals coming on board as we conclude them.
One final point. What should exporters and importers, for that matter, be asking of their hauliers? I mean, how do they ensure that their goods aren't delayed because the haulier isn't ready?
Well, what they firstly have to ask the haulier is, are they customs approved to deal with all these simplified procedures? I mean, one of the conditions of the exports is that the haulier will actually have to be approved for what we call authorised economic operator status, because it's the only way in which agents will be able to use the simplified export procedures. Now, again, it wasn't broadcast on the rooftops by customs, but this is gradually coming out more and more. And given that in the country as a whole, there are only 750 AEO authorised traders, the majority of whom are freight forwarders, that creates a challenge, because in many cases, it'll be the case that the importer or the exporter will have to use an agent that's AEO approved. And even if their own agent isn't, that agent will have to subcontract all the declarations to this AEO approved agent. So primarily what we have to make sure is that those agents are approved for some form of simplified procedures, AEO for export, import, transitional simplified procedures, so that there will be no delays in crossing the border. In other words, they'll be able to pre-clear the goods coming in or going out, which means an automatic dispatch on a ferry or an automatic arrival without the need for any costly delays at the ports or the airports, however the goods are actually being brought in.
Thanks, Mark. That's been very helpful. You can learn more by downloading Mark's webinar, which is on the Chamber website at cumbriachamber.co.uk/Brexit. And if you've got any Brexit queries, we have a Brexit hotline. We have Brexit advisors who are there to help you. And the number to call is 0845 226 0040.
And may I also add that because of the interest in customs areas, I have been asked by Cumbria Chamber to supply my services as a customs advisor to the Chamber here. And may I say here and now that if any of you do have customs issues, and it isn't simply for Brexit, it's anything international, please get in touch with the Chamber. I know that they'll relay the messages to myself, and I'll be very willing to talk to you about various issues that arise in general to do with customs and VAT.
Excellent. Thanks again, Mark.
My pleasure.
Thank you for listening to the Cumbria Chamber of Commerce podcast. You can find out more about how we're supporting Cumbrian businesses at cumbriachamber.co.uk and cumbriagrowthhub.co.uk. In the meantime, thank you very much for listening, and watch out for the next episode, which we'll be releasing very soon.